Can you guys hear me? Not sure if you guys can hear me, but let me know. What's up? So I'm sorry about the delay. It took me a minute to figure out how I was gonna do this. So I mean, I'm looking at gold right now. It was a very crazy drop today. So these two levels, this one up here, this one down here, this is really what I'm watching right now. We didn't really get a liquidity sweep on gold as yet. During the New York session, I mean, we had this bearish structure, but yeah. So for those who want to understand the basics of the New York manipulation, basically, I'm just gonna leave this here first. I'm gonna show you guys what I mean by the model, and I'm gonna use yesterday's example, and I think it was right here. All right, so just to kind of break it down for you guys, the whole point of a manipulation is you want to see a fake out one way and then a rejection, right? And then you want to be part of that rejection right after. So what I've realized over the last 6 months or so is that the best liquidity level for me is London highs and lows, especially when I'm just trying to trade New York. I mean, technically nothing beats the daily highs and lows for me. Those are where you see the really big reversals. But, you know, if you're just trying to get your intraday scalps, especially during the New York session, which, well, the kill zone is at 7 a.m. Eastern time. So I'm looking at the charts during New York at 7 a.m. Eastern time until about 10:30. And we'll see how long this goes for, but I'm gonna have my eyes on this for, you know, probably 45 minutes to an hour to see if there's a trade. But yeah, usually that's my window, 7 a.m. to 10:30 a.m. Eastern time. Ideally, we get the move after 8 though. So 7 to 8 is usually like price beginning to move towards a level of interest, but the move, the sweep, and then the rejection for me usually happens after 8, and usually even after 8:30, right? But yeah, before 9:30. But yesterday, so this is what we had yesterday, and it's really important that, you know, price at about 7 a.m., which is, let me mark that out. Right here, opens up between the, you know, London highs and lows. So the highs, unfortunately, were all the way up here yesterday. So that's the 2 a.m. That's when the London kill zone starts. And then this right here, these were the lows that let me do that again. That was a low. I'm on my iPad, so, you know, it's a little tricky right now. But anyway, so that was a London high and that was a low. Well, during the kill zone at least. Now I don't like highs when you've got this. You see how you've got this downtrend here, right? All these little swing highs that we have in the middle as we go down, these aren't highs that I'm really looking at, right? I'd rather have it be a clear move up and a clear move down, right? So maybe like a high like this, a high like this. Those really are levels that I'm more interested in, right? A high like this. I don't really like this because this is just kind of like sideways movement. You've got, technically by definition, it is always this is a swing high, but you know, it's not like we didn't actually have a move up and down, right? So really, when 7 a.m. opened, I was first looking at these highs, but then you see how price just went up, we didn't really get too much of, I mean, there was an engulfing candle here and here. However, I didn't take this one. You see that time? That's at 7:35, right? So a lot of times for me, the back test, like based on back testing, I prefer those sweeps to happen after 8 o'clock, like I said. It just works out better for me. This is a little too early for me. I wasn't really a fan. And sometimes what happens is when you go for the highs in the beginning of the New York kill zone, that high is then revisited a little later, right? So this, I was just kind of waiting. And then I think when I posted on the Telegram, it was somewhere around here when I said nothing but chop for now. I think that's Mercy. Yeah, I usually like waiting for a sweep. I don't, I just prefer waiting for a sweep. It's high probability for me. Especially for this model, for the New York manipulation, right? So then this really was the high that I was watching. Again, you see how I'm not looking at, these intermediate highs or that one. This is kind of sideways action. I want to see the up and down, and that's what I'm looking at. And so we came up here, we got that engulfing candle right here at 9:30, right? It was at so we swept it at about 9:25, and then this candle was our engulfing candle. So let me just mark that out. Right. Yeah. And so when I see that, the hard part was that that's a 200 pip stop loss in gold, right? It's a little uncomfortable for me because the smallest lot size in gold, if you're trading Forex, is 0.01 lots. Right, and so if you have a $20 stop loss, $20 stop loss, or 200 pips in this case, then you stand to lose $20. Now, if you're trading with, say, a prop firm account where your account size is $5,000 or $2,500, if you're trading with one of them smaller accounts, this might exceed your risk parameters. So it is kind of tricky, right? But you get that manipulation up here, you get that rejection, and then for me, the entry can be one of two ways. It's either directly on the close of that engulfing candle, or it's going to be a retest of this, this order block, basically, that was engulfed, right? So for me, I took my entry on that retest. So the way I usually decide of where I should get my entry is if the stop loss window is a little too big. Right, which in this case it was. Like I said, it was about 200 pips. I didn't really like it. But yeah, I had my stops out at the highs here, and then my target was this level right here. Right, but obviously this whole shit went nuts. Probably shouldn't say that. But yeah, we had that crazy drop on gold after that. So yeah, it was pretty wild. But, you get this set up multiple times a week. I think we had it earlier this week as well. So this is Wednesday, I think. Yeah. Yeah, right here. Let's see, 8 o'clock highs. Yeah, so this one did not give the engulfing. What you got here, we did get a change in state of delivery eventually, but you see how the highs are swept again. Right, you sweep these highs and then you move lower. So if you want an entry, you can go to a lower time frame, find an entry. I'm not really too worried about that, to be honest. I like sticking to this in the 5-minute, maybe the 15-minute for that extra confirmation. But yeah, the 5-minute usually works for me, and you get 2 good trades on average a week. Was there anything here? This was. We got the sweep lower, and then we got the move higher, but we got, yeah. And so if I just, midnight, price is just kind of chopping. Oh, I think this was the day that I didn't want to trade because it was just so choppy, the price action, right? I remember now, Tuesday. Yeah, I think Tuesday was the day where I just didn't want to get involved. Or was it? No, it was Monday, actually. Sorry. Monday and most of Tuesday were pretty choppy. This one, we got a sweep of the lows over here. right? These lows, these lows, these lows. Got to sweep and then a push higher. So yeah, that's basically what I like to watch during New York. Probably not as great an explanation as I could do, but you know, I'll probably try to explain in a little more detail some other time. Let's see. If you guys got any questions, just definitely ask. Yeah, if you guys want me to look at a particular chart, because I'm just waiting right now for my personal trades. I'm just waiting to see what happens. How's silver doing? There's a crazy drop on that today. Yeah. Let's take a look at yeah, silver had a long overdue drop. I'm gonna look at crypto really quickly. Let's see, ETH. Yeah, that trade I got stopped out on. It's pretty ugly. In all honesty, just looking at this, my thought is we're gonna sweep those lows. We're probably gonna end up sweeping those lows next. Let's see, what's ETH gonna do? So let's just talk about ETH real quick, right? What happened here was, at least for me, the way I've been watching it for all of 25 and 24, was that you had this range that dates back a really long time, as you can see over here, right? And before that crazy push down at the end of 24, what I was looking at was these equal highs and these equal lows. Let me do that again. Yeah, and so you had a range with equal highs, equal lows. Price went up, did not sweep it, but ultimately what happened was we just started moving lower, right? We came up here, and this right here is what ICT calls engineering liquidity, right? So we come here, we tap this level, we get rejected, then you got this whole bearish market structure. And my target, when we basically made this lower high, was to eventually go down and sweep these lows. It was just way too clean for me to believe that we weren't going to go back to it, right? And so we eventually did. You got this manipulation right here, and when that low was reclaimed, I remember we had a long in the middle of 25 that went up to, I don't know, it was 3,000, 3,005, 3,004. It was a really good long. But yeah, the final target was to come up and sweep these highs, right? And price eventually did. Now, unfortunately, I think that's where altcoins in general kind of lost steam, right? This was leading up to the elections. No, this was way past it. Sorry. What was Trump elected? 24. Right, so yeah, this was towards the end of last year. Right, we go up above 4,000, and then now we got this kind of crappy move lower. So the structure for now, the thing is, this whole thing, right? I thought we were just coming to retest this 4,100 level, because oftentimes what happens is when you've got these equal highs and you get a break, you're gonna come back retest, and that's really your cue for a potential move higher. Oh, we didn't get that. We just had this slow grind that was kind of a tease, and then it just came all the way. It just kept going down. And once we broke below this 4,100 level, so towards I think, yeah, it was September, October, my key level was 4,100 for ETH, and we broke back down below it. And the moment we did, I was like, crap, we're probably gonna go visit these lows eventually, 3,400. Then after that, it was 2,800 for me. Those were the two next levels that I was watching. The issue right now is that we've switched to a bearish structure. It's hard for me to look for higher prices on ETH right now because Bitcoin has closed inside the volume profile, the value area high of the volume profile. I'll show you that in a minute. But ETH coming down here, getting rejected here at this 3,400 resistance. Now we got this engulfing candle. I can't help but to think that this is going to be the next target. And if we start to gain acceptance inside the 2,800 level, which we're kind of trading below right now, I think we will eventually go down to 21, right? 21 to 22. I don't know if we're going to stay there for long or if it's going to be one of these, crazy wicks. So it's just going to be something I keep in mind, especially if we can't reclaim that. I really want to see price stay up 2,800. That's going to be the biggest thing for me. Yeah. You see that whole, it's just been chopping in this range for the most part for ETH. So Bitcoin, what I was mentioning was we have this volume profile that started at the bottom of the downtrend. January 23, right? I think January, yeah, 3 years ago was when this uptrend started. And so I drew it out until, I should probably keep it till the uptrend. Most people use volume profiles just for the range, but I kind of like to use it for trends as well. It just shows you where a lot of the volume was as price moved higher or lower. In this case, when price moved higher, these are high volume nodes, right? Where price spent a lot of times, they tend to act as levels of support and resistance. So Bitcoin went up into that weekly fair value gap that I had marked out from a couple of weeks ago in a weekly outlook, right? So it goes up, wicks into it, and then we get rejected, right? That little gray box over there, that's on the daily time frame, the level that I marked as resistance. And now this blue line, that's the value area high. So breaking into it, I'm just not a fan because, well, the point of control is all the way down here, but this high volume node at the, this little cluster right here, that's what I'm looking at as the next possible target, which I'm not a fan of because, well, I'm big into crypto, so I don't want to see it dip down that low. But right now, my immediate target is those 74,000 lows. I think unless we, there's one more day before the month ends, unless we get a really nice close in the next 36 hours. We got a day and a half, right? Yeah, there you go. In the next 36 hours, I feel like we're going down for those lows next. And so Ethereum is likely going to follow, right? So I think Ethereum goes down to those lows, and I think if Bitcoin does actually go down to that $67,000, I think ETH visits the 2,100 level again. Yeah, I say that with a little bit of pain in my heart because I don't want that to happen. So I just hope I'm wrong. Even Solana, right? I just don't like this. We're breaking down below the value area low of this entire range that we've been in since late 23. Yeah, and if we do, then these lows, right, 97 that we made in April last year, and then probably even the 78, 77 level, that's going to be the next level to watch. Anyway, so that's crypto. Kind of a bleak outlook right now. I honestly had hoped that when money was done flowing into precious metals over the last year and a half, well, for silver really over the last year, but for gold over the last 2 years, I really hope that it would then go into crypto, but I think there are rumors about Trump's next nomination, right? Or it might have been out, I haven't checked yet, but he's gonna nominate someone for Fed chair, if I'm not mistaken, Kevin Warsh, I think. And he has a history of being hawkish. So that's not good, right? We'll have to wait and see how that plays out. But yeah, let's go back to gold really quickly. Look at that. That's just nuts. I've never seen silver fall 13% in one day before. I just never seen that. Wow. Right, the monthly candle still fine. Weekly candle kind of looking a little ugly right now. Gotta get rid of that. If I go to the daily, honestly, like there is a part of me that believes that gold could have a much deeper dip. Probably till here. I think this level is possible. This is a gap from a couple of weeks ago. Well, more like 10 days ago, yeah. I remember that weekend too when I had the highs and lows marked, and I was like, okay, maybe we get a fake out and then a move back down. And instead we just gapped up higher, and nearly every day we were gapping up higher, gapping up. And it was nearly impossible to trade previous days levels because we just kept pushing higher and higher and higher. But yeah, so that's this level that I'm watching overall on gold. So we did, look, this is, so I'll let you guys in on this. This is actually something that I did not learn myself. If you take a look at that candle over there, this candle doesn't have a wick to the upside. I gotta give credit where credit's due. I kind of learned it from this trader. His name's Finesse, but he's, the master at the no wick candle. That's usually a nice level of liquidity to have marked. Price tends to draw up there, so technically you can see this move up there as a move into that no wick candle, right? And so we did, I guess, get a sweep. You got this engulfing now that followed. I'm not in a trade, but this is valid for me, and I'll tell you exactly why I'm not in a trade. Because I wanted these highs to be swept. So in the beginning of this stream, I told you, like, when it's a high that's in the middle of a consolidation like this, in the middle of a downtrend, this isn't really a up and down, right? This is more of a sideways kind of thing with a swing high in the middle. I don't give as much of an importance to swing levels that are like that unless it's a pretty clear high or low. This one, it's kind of sideways, and it's a swing high by definition. The only thing that I liked was that there was no wick here. So this would have been, I guess, valid, but no, I'm not in a trade. For me, that trade would have come if price swept this high. That would have been, far more attractive to me. We also got, some levels up here that honestly I'm watching. Given how hard price has dropped today, yesterday, I'm also a little bit worried about jumping on that bandwagon just because I don't want it to be a FOMO trade. But yeah, if we break down below these lows, then I think we go down towards there, and the trade would have been something like this. Something like that, a 1.4R. But yeah, you see that? Look at that stop loss. That's a 400 pip stop loss on gold. It's just, yeah, it's even if you trade the smallest lot size, like 0.01, that's $40. You know, now if you have a $10,000 account or higher, that's not a big deal. But I'm just saying, like, if you're trading a smaller account size and you're actually sticking to your 1 to 3% risk rule, that's a big stop loss. So yeah, just another reason why I'm not really too keen on taking it. But it looks like it's going down to the target. Mercy, to answer your question, I don't know if you're still here, but I mean, having a trend in mind is helpful. If you have a daily bias, it definitely helps. Probably increases your probability of winning the trade or losing the trade. But yeah, if you've got a bias and then the sweep and reversal matches the direction of your bias, it's gonna help. And so there's a couple people who I do one-on-ones with, and I always try to tell them, try to find moves that align with your bias, because for me, that just increases my probability tremendously. And I think it's easier, right? It teaches you to practice a little bit of patience, and it's easier in the sense that you're not as conflicted. If you see a trend in one direction, and you see price then moving in that direction, there's a lot more confidence, right? Knowing that you're part of the trend. But in general, when it just comes to an intraday thing, like a trade that I'm going to be holding for 15, 20 minutes, maybe an hour tops, like the New York manipulation, I'm not too worried about the trend. It can and does work on an intraday level, but I'm very quick to take my profits. So I often have TP1s and TP2s. You're not always going to get your 1 to 3 risk to reward ratio, but you can, you can get a good amount of profit on a 1 to 1, 1 to 1.5 as well. And if you trail your stops, it's not too, it's not too bad. But I think everybody kind of has their own trading style about how they want to trail their losses, how they want to take their profits. So it's something that each individual will probably have to go back test. So yeah, let's just see. I'm just waiting to see how this one in particular works out. There it is, right? We just made new lows. As ICT would call it, that's the low-hanging fruit target, right? And we just hit it. Low-hanging fruit is usually, the closest swing low after you take your entry, or the closest swing high after you take your entry. Notice so that's usually the first target. It's the easiest target. So that would have been the trade, right, for the New York manipulation today. Again, if I could kind of just explain it in some basic steps, I'll probably create a proper video for it later down the line, but I want to see New York open within London's range, right? And so over here, New York opened, let's see. Well, today we actually had to move lower for all of London, right? So London started, the kill zone was there. That was the start of London. And then this was the low at about 450, right? So that was London high up here, London low down here, right? And now notice at 7 o'clock, which is over here, right? This candle, I mean, we formed the high there, sure, but the point is we're inside London's range. And that for me is crucial. I don't want to see, like, if New York opens expanding right away, I'm usually not looking for the London manipulation, the New York manipulation on that day. I want to see New York open within London's range, right? So we got that over here. It opened in that range, and then now I'm kind of just watching, waiting for price to maybe attack one of them levels come 8 o'clock. It could happen earlier, but yeah, if it happens earlier, I'm not a fan of it. Right? I don't like trading that 7 o'clock to 8 o'clock. I like that to be more of, the wind up. And then 8 o'clock onwards, that's when I'm really looking for the liquidity sweep and then the rejection. Now, over here, when we went up, 9:30 open, we come up to this level. Would have been nicer because I like swing highs like this more, as I was mentioning earlier. I want it to be an up, then a down, or a down, then an up, not a sideways kind of thing. But this was that no wick candle that I talked about, right? So this is a valid liquidity sweep, and then we got this engulfing over here, and then from that engulfing, that's your entry, right? Or at least that would have been my entry. Again, I didn't take it. I told you guys exactly why I didn't take it, but I drew it out for you once we came back from the Ethereum charts. Let's go down to the 1 minute. Let's just see if there's anything there, or if there was anything there. Yeah, you see that? Price goes up, sweeps that high. Well, those highs right here. We get a move lower. And then there's your, if you guys like trading market structure, that's your break-in structure, right? You have a high into a liquidity sweep at the 9:30 open, and that's honestly a classic. You get your shift in structure, and then you take your entry, right? So the shift in structure coincides with a 5-minute engulfing candle. And if you could have taken that wick, so that's your, what is it called? The institutional order flow entry drill that ICT coined it. When you've got that fair value gap after a big move, and then the next candle wicks up into it and immediately gets rejected. So that could have been like a lower time frame. But me personally, I do not like trading gold on the 1 minute time frame. I just don't like doing that. Primarily because there's a lot of noise and a lot of manipulation. It's so easy to get wicked out, to get stopped out. I'm not a fan of it. I don't really want to get caught up in it, right? It's easier for me. That's why I stick to the 5-minute time frame at most. It eliminates a lot of that noise. Let me check. Do we have an SMT forming here with silver? I think so. Yeah, we've got a bit of a SMT divergence. You see how here silver made a higher low, but gold made a lower low. So that's kind of like a little SMT divergence. I'm not going to be using it here because the trend is bearish, right? And we kind of already got our move today. But yeah, it's just something that we keep in mind. All right, well that would have been a nice one for the London manipulation today. Hopefully that was helpful. But let me know if you guys want me to check out any other charts or look at anything else for now. what can be the trade now? I don't know. Like, for me, that's the window, right? And I think that's crucial. If you need to constantly be in a position, that's a problem. You trade your model when it shows up. That doesn't mean that just because you get out of a short doesn't mean that you're immediately taking a long. It just means your model played out, your setup played out, you're done. Take your profits, go home. Wait for the next time. Wait for the next time that your model shows up. So for me personally, like that was my trade, or that would have been my trade. I'm not taking a trade from here. Once that New York manipulation happens, it's done. And I think it came up yesterday, today. Today with this is not an A+ setup for me. This would have been more like a B+, just because of how I explained this. The swing high was positioned, but it is still valid. Gonna check NASDAQ real quick. I'll just strike NAS 100. Yeah, that was choppy. Is it just me, or has the 9:30 open lately just been really crappy? I mean, look at that. Right, and I feel like the real move usually, I feel like it comes after the first 20 minutes of the 9:30 open. I really need to get back into trading futures. It's been a while. I've just been so caught up watching gold for the most part. This is far more fun for me, to be honest. But yeah, like I said, I overall, I'm not really bullish on gold for now. I mean, well, in the macro I am, but I think we could go down to, 4,600, 4,700. I think we're gonna get there. And it's pretty crazy to think how this grind up was one step at a time, and then we just get this insane move down. Like, the volatility and the price movement it's been a little much, right? And you already saw that in today's trade. There was a 40 pip stop loss in the trade that we had planned out. That's sorry, not 40 pip, 400 pip stop loss. That's kind of nuts for gold. Yeah, you just look at these candles, and I don't know. I think there's liquidations, probably. There's got to be, crazy amount of liquidations that happened. Everybody's just betting on this to continue going higher, as if everything can just go up in a straight line, But yeah, this was a real good wake-up call, I'd say, for a lot of people who tend to FOMO in to their positions. One of the metals that I'm really watching is copper. I think that this has shown a lot more strength compared to some of the other other metals out there. We're only down 4% today, I think. Yeah. See, I mean, look at that. It's the metal that dropped the least out of all of all the other metals. I mean, gold is down 6%, silver 13-14%. Yeah, platinum as well. I think after hitting all-time highs, it just went down. Right? Yeah, platinum's at all-time highs. Palladium, not so much. Alright, well, I'll leave this on for another minute or so in case you guys have anything to ask or say. Otherwise, I'm gonna end this stream in a couple minutes. I'm gonna try to do this more often. Especially for the New York manipulation, because there's a set time for when I look for these trades, and I think it might be helpful just for people to look at it, get a feel for how I do it, because I have gotten a lot of questions about this model, and I haven't really fully answered it for multiple reasons. I mean, it's hard to just type it all out on text, right? And I haven't really had the time to go create and edit a video. So I figured maybe a live stream would be better, and hopefully over time it's gonna give people a better idea of how I like to use it. And you know, I want to, I guess, end this by also saying that none of this is meant to be financial advice. Of course, this is just what I do, what I've noticed. It's all for educational purposes. Manage your risks, because there's a lot of loss, a lot of risks in trading. Right, the losses can be huge. You guys probably seen that with gold over the last few hours and a couple of days. So, but that's every asset. So, you know, I'm no advisor or anything. I'm just showing what I do. Yeah, and so here's why this is called the low-hanging fruit, right? We get to move down and then we bounce up right away. You know, so even though my bias is bearish for a while, that I think we go lower, that doesn't mean that I'm gonna, you know, just keep holding my short, especially if I'm taking an intraday trade. Right? We got our move. And that's that. So I'm gonna end it there, guys. Hope you guys have a good one. Have a great weekend. I might do one again on Sunday just for a weekly outlook, just to give you guys an idea of what I'm gonna be watching for going into next week. It'll either be a live or it'll be one that I edit out. I'll see, but I'll post it in the Telegram.